think the bigger concern for Australia is not necessarily the impact on China specifically, but the more broader kind of negative business sort of environment that we're seeing now with all this uncertainty, with all this market turmoil.
Welcome. Has Donald Trump killed China's $500 billion export trade into the United States?
Well, China's exports to the US are not going to disappear overnight. Many of the products that are being targeted with tariffs, there aren't really many alternative suppliers outside of China. So in the short run, many US importers will simply just have to stomach the additional cost. But certainly over time, clearly, these very, very elevated tariffs that we're seeing will incentivize shifts in supply chains, in production outside of China. And I think over the next couple of years, we could well see with this level of tariffs, China's exports to the US more than halve. So a very substantial loss in export revenue to the US.
So is it now safe to say negotiation is off the table? We should expect a protracted trade war and incredibly big shifts to the way trade is carried out.
Well, I wouldn't say it's completely off the table. Both sides have said that they're open to negotiation. Trump does still seem to be holding out hopes that China might approve a TikTok sale in the US. He recently extended the deadline for TikTok to sell its US operations or exit the market for another 75 days. So I think Trump, is showing some signs of willingness to negotiate. I think the issue is more really with Beijing. There doesn't seem to be much urgency among the Chinese leadership to really come to the table. I think they may have concluded that actually they're in a pretty strong position to weather these tariffs. Obviously, I mentioned there's going to be a big fall in shipments to the US, but they're a lot less dependent on exports to the US than they used to be. And I think they maybe just feel that politically, Trump may be in a much weaker position in a year or two's time, and actually maybe that's the time when they want to come to the table and negotiate. So it doesn't seem like we're heading towards a deal anytime soon. So we should probably expect these tariffs to remain in place, at least for the time being.
Given the importance of exports to China's economy, and some 16.4% of Chinese exports last year went to the US, what are the options for China now to support its very fragile yet starting to recover economy?
Yeah, so roughly 15%, as you say, of China's exports go to the US. But what we did see during the first trade war is that when those exports were subject to tariffs, a lot of those shipments were simply rerouted to the US through other markets, or they were shipped to consumers elsewhere outside of the US. So there will be partial offsets. Not all of that trade will disappear. And the exchange rate could also adjust to offset some of the impact of tariffs. And we are starting to see, I think, some willingness on the part of the Chinese authorities to allow the RMB to weaken. Over the past week or so, they've been progressively setting weaker fixings every day. And the RMB is now at its weakest level in around 15 years. We think that will continue. We actually see the RMB going all the way to 8 against the US dollar by year end. And that will absorb some of the impact of the tariffs. But still, even with those offsets, you're probably looking at a hit to China's GDP of at least 1%, if not maybe a little bit higher. So clearly this will do quite a lot of damage. And I think really the only option to offset that is through increased policy support domestically. Now, I don't think monetary policy can really do much in the current environment in China. China's in a bit of a liquidity trap. But fiscal policy, certainly we could see a bit more. And actually, over the weekend, there was a commentary in the People's Daily which acknowledged that they might have to do a bit more on the fiscal front. They might have to increase the deficit ratio, increase some of their quotas for bond issuance. So I think that's where we should be looking for a potential sort of domestic offset here.
You mentioned that the expected hit to China's GDP is about 1%. What does that mean in the context of Australia, given that Australia is extremely sensitive to the state and health of China's economy?
So the hit from tariffs will be 1%, but that will be spread out over at least a couple of years. So as I said, that won't happen straight away. And there are domestic offsets, as I said, and we already saw in the budget in March at the National People's Congress that they're loosening fiscal policy. I think they might loosen that a bit further. So likely the slowdown in economic growth may not be as large as 1%. And I think, if you think about Australia's exposure to China, obviously one of the key channels is through construction activity. And although fiscal support, the composition is shifting towards consumption, we are still seeing a lot of infrastructure spending. And so to the degree that China tries to offset export weakness with increased infrastructure spending, it actually may not be necessarily a bad thing for the Australian economy. To be honest, I think the bigger concern for Australia is not necessarily the impact on China specifically, but the more broader kind of negative business sort of environment that we're seeing now with all this uncertainty, with all this market turmoil. So really the key, I think, will be hopefully the Trump administration becomes a bit more willing to negotiate, if not with China, then at least with some of these other trade partners. We see sort of markets calm down a little bit, stabilize a bit, and some of that uncertainty goes away. Maybe that's wishful thinking, but certainly I think that's the key really for the Australian economy.
With increasing fears for global growth, would it be wise for Australia's Reserve Bank to consider bringing forward its May monetary settings meeting to consider an emergency rate cut?
Well, I think it's certainly a possibility, but I think we have to keep in mind that actually, in terms of the global trade war that's going on and all these tariffs that Trump is imposing on lots of countries, that Australia actually doesn't come out that badly. It was only hit with this 10% minimum tariff. And compared to most countries, its dependence on the manufacturing sector and particularly on exports to the US is very small. So actually the sort of direct economic hit from all this doesn't look particularly large. The bigger concern, as I mentioned, is the indirect impact of all this market turmoil, wider global slowdown. So I think a lot will depend on how things play out in terms of negotiations over the next few weeks. Probably makes sense for, I think the RBA can afford to maybe wait and see, and probably wait till its May meeting to do that next cut. That's certainly our view. We're not expecting an emergency rate cut at this point.
So given all we're seeing, would you say Australia at the moment still looks like the lucky country?
Yeah, once again, Australia somehow always manages to be the lucky country. So, obviously nobody wins in a trade war, but Australia seems to be coming out relatively unscathed.
Julian Evans-Pritchard, thank you.
Thank you.